What's making headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello, welcome back to What's Making Headlines. It's Annie and Ben here today, unpacking the big themes of the week and what we've been up to. How's your week been, Ben?
Yeah, pretty good. It's been a busy week. It's kind of at that time of the year where things are still a little bit flat chat, but also you can sort of see the end is in sight.
Yeah,
as well,
I feel like we're in the real, the crux at the moment. It's still so busy. Everyone is, I think, rushing to get stuff done.
Yeah.
Things are changing left, right and centre. I think everyone's kind of trying to roll out all of their changes before the end of the year. And I think this year as well, we've had so many events on. This week particularly, we've been out and about all over the place. I know you went to the MFAA because they have a new office that opened in Sydney.
Yeah, on Tuesday I went to they had a sort of little event for their opening of their new office in Haymarket in Sydney. And super nice. I always get office envy when I go to someone. Yeah. We've got a nice setup here, but I always sort of like seeing other people's offices and that kind of thing. And it was nice to sort of chat with everybody as well.
Because they also launched some new broker guides this week as well, which you were writing about for our broker titles.
Yeah, so they released free guides this week, which is sort of drawn from insights that they took as part of their broker roundtable series. They have these roundtables around the country, and I think the guides are sort of draw insights from about 50 brokers and brokerage businesses. But yeah, it was super interesting. They released 3 of those guides this week, and there's 2 more coming, I think, in January next year, I think.
Interesting resources. Talking about office envy, though, I went to an AMP event on Tuesday in Circular Quay, and they have a stunning view across the harbour. So you've got the Opera House and the Harbour Bridge there. They're up on the 30-something floor, and you can see across the whole city, and it was a gorgeous day as well. And I was like, this is real peak office vibes, because it's the whole wrap around of Sydney as well. So you can see Domain Park and the Botanic Gardens over one side. It's very nice. If I worked there, I wouldn't get anywhere done.
No.
I would just be staring out the window the whole time. No. So that was lovely. And I also had a lovely Catality event this week as well, which was up in Cafe Sydney, actually. Again, stunning views across the harbour, really nice food, and really interesting bunch of people there as well. So obviously it's the their end of year dinner, so it's sort of property people, it was mortgage people, aggregators, lenders, and had really interesting chats with people that I'd never met before in different industries, and just talking about what the property market's been doing, because of course really, really hot at the moment. We've been talking about it the last few weeks. I think Catality was saying at the moment, the year to date so far, it's been 7.7% increase in house prices. They expect it to be just over 8% by the end of calendar year. So when you think back to, what they were forecasting at the beginning of the year, I think they were saying house prices may be going up 6%. Finishing much higher than that, 8%. And then kind of cooling off next year. And I think that's even with fewer rate cuts than we were expecting to have. So even, can you imagine if we had gone down an extra 50 basis points, what house prices would be doing? People would be really falling over themselves. They really are.
Yeah, 100%.
Speaking of property buying, though, today is the launch of the Help to Buy scheme. Finally. We've been waiting for this scheme for years, and finally it's actually out, although kind of limited in capacity.
Yeah, so it's currently available for 2 lenders at the moment. That's that, right? It's CBA and Bank Australia.
Yeah. And yes, last week, people might remember, I actually was reading the Help to Buy announcement when they announced it was going to be starting today. And I was having a look through on the Housing Australia website, and I was trying to find, how can brokers actually write these shared equity loans? We'll get into what the details are if you can't remember in a second. And then Commonwealth Bank of Australia put out a press release saying we're launching with the Help to Buy scheme. And at the very end, it said the Help to Buy scheme loans will be available through home loan specialists. So I reached out to them to be like, does that mean brokers can't write this? And they were like, yeah, so it's going to be direct only. But we might review this. So we had a comment from Babazaka at CBA talking about saying, it's really a limited scheme to begin with. It's, probably not going to be massive amounts of people that are applying for it because it's for a very specific pool.
Yeah.
It's not like the 5% deposit scheme where it's sort of everyone. And he was like, so it's going to be limited. So to begin with, we're definitely starting with home loan specialists. We might review that. And then, of course, we're sort of talking about their commitment to the broker channel more broadly. But we kind of know from the past, CBA really been saying they're focusing on their proprietary channel. So this is yet another move. But what a sort of disappointment, I think, for a lot of brokers that there's only 2 lenders and half of them not offering Help to Buy through them.
Yeah, so Bank Australia is offering through the broker channel. That's right.
They confirmed, yeah.
Okay, yeah. Yeah, it is interesting. And is it just because it's early stages of the rollout, or I guess
I think we'll have to wait and see. So I think, again, we've been following Help to Buy for so long. I kind of feel like there was a point where I just stopped checking. I was a bit like, where are we with the legislation? Because it took ages to actually get through Parliament. Only really went through this a couple of months ago. And they also said they recently opened a tender process to say if you're a lender and you want to join the lender panel for Help to Buy, you can do that now. And they opened that like 2 weeks ago, maybe.
Okay. Yeah.
So it's a pretty like tight turnaround. I was like, why would they not do this earlier if they were going to launch it so soon afterwards, but only have 2 lenders already on the panel? Like, yeah. So they kind of is still, I think, going through the process of actually choosing lenders. So I think the actual tender process is sort of closed now. I can't remember the actual shut-off date. And they said in early 2026, we'll be bringing on more lenders once they've kind of confirmed them. So this is definitely the beginning of Help to Buy. And I think next year will be the kind of broader rollout as more lenders come on board. And hopefully we see many more lenders confirm that brokers can write it, because it's a really great scheme. So I'll just walk through some of the details. So it's mainly targeting low and middle income earners, and the income caps are $100,000 for individuals and $160,000 for joint applicants and single parents. And basically they're saying you only need a 2% deposit to access a normal mortgage. And what will happen is if you're buying a property, an eligible property, so different property price caps in different states, you can have a 2% deposit, apply for a loan with a participating lender, and you only have to contribute between 70 or 60%. So if basically the government will purchase the other 30% or 40%.
Yes.
So I think there was an example which I included in our story this morning talking about it. And I'll just read that out quickly for you, because I thought that actually kind of helped provide some context of what exactly this looks like. So basically, if you're looking to purchase a house that's $800,000, let's say, then you can save up for a 2% deposit. So that's $16,000. Then you can access a loan through a participating lender, in this case, Bank Australia, if you're using a broker, or CBA if you're going direct. Then the government would contribute up to 30% of the mortgage costs. So in this case, it'd be $240,000 of this $800,000 loan. And the borrower would need a mortgage of $554,000 to cover the remaining 68%. So they've got the 2% deposit. The government's contributed 30% of the property. That's for an established dwelling. They give you 30%. For a new dwelling, a new build, it's 40%. So yeah, so you've got the 2% deposit of 16 grand. You've then applied for a mortgage of $544,000, which is the other 68%, and then the government provides 30%. But basically, the scheme's not really about just purchasing a house with the government sharing the cost.
Yes.
It's really about helping you get onto the ladder if you're a low and middle income earner, because of course, as we talked about already, house prices are going up so quickly. So the main idea is that you actually pay the government back as quickly as you can.
Yep.
So, or buy them out. So basically being like, you need to pay out the government share at some point over the life of the loan. And it's always, the amount paid will always be based on the value of the property at the time of making the payment.
Okay, yeah.
So you can either pay out the government by voluntary repayments in a lump sum, or when you sell the property, and they'll take a proportion of the profits or the losses, hopefully profits. But yeah, so it's really about making sure that people are getting onto the scheme and being able to purchase the property if they want to on a lower income. But again, there are so many kind of caveats around this, and lots of people kind of being like, does it really help? There's 10,000 places a year, so I think it goes on for 4 years, so 40,000 places in total. And really, I think a lot of the questions around this are being like, well, how do you use it? Because it's not available in all states. Tasmania actually said they're not going to be participating, and WA haven't passed the legislation yet, so it's only 6 states to begin with. And of course, as I said, the different property price caps apply. So depending if you can find a property, and you only have 90 days. So, you know, the normal kind of pre-approval process, I think, applies here. But in this market, that might be tough to find a affordable house.
It's a lot of pressure to turn
all
that all around pretty
yeah.
quickly. I mean, I think the scheme is sort of, at the heart of it, it's sort of the best intents for sort of those essential workers and low income families that sort of want to be in these places. But it's always interesting to see what the actual rollout looks like and see it all in practice.
And of course, we have heard from many brokers and the broker associations about the Help to Buy scheme being like, we want to make sure that borrowers are able to access it and can do so through a broker. So we talked to both the MFAA and the FBAA this week about it. And basically, CEO of MFAA, Annie Kane, was saying, you need to be giving customers choice and really saying, it has to be available through mortgage brokers because this is really about helping borrowers get onto the ladder. And surely, if they're more than 3/4 borrowers are choosing to use a broker, they should be able to do it. Some brokers also making the comments on our story saying, how is this even allowed? If it's a government scheme, surely it should be available through everyone, not just one channel only. Why aren't they being forced to open this up? And the FBAA Managing Director Peter White had a quote which made me chuckle a little bit. He said, "It's CBA risked killing the goose that laid the golden egg."
Yeah, so
and I was like, you can always rely on Peter to put it in such a great way. That made me chuckle. But again, being they're not obliged to work in their best interest. Banks aren't, brokers are, and they're obviously doing a lot more of the kind of the budgeting work. So this really should be something that brokers are able to access. And he said, if the nation's biggest bank has an effective veto over participants in the Help to Buy scheme, how does this support the federal government's goal of creating a new generation of homeowners? So good point. So lots of work here. The association saying we want to ensure that lenders are opening this up to brokers when they come on board next year. So that was really the big one for Help to Buy today. And I'm looking forward to seeing how that tracks and whether that actually helps people get onto market. But of course, not the only thing we've been writing about this week. Loads of other big announcements, and we'll get into that just after this. So next week, we've got the Reserve Bank of Australia making its December rate decision. And all eyes will be on, obviously, what's happening with the interest rate and the official cash rate. Interestingly, though, more people saying probably not another rate cut this month, if at all. Lots of banks now changing their forecast to be we actually think this is the end of this easing cycle. And ANZ, the most recent one to do it. What were ANZ talking about?
Yeah, so basically ANZ has removed its previous forecast for a final cut in early 2026. And it says persistent inflation and sort of a balanced labour market means the RBA is likely to hold the cash rate at 3.6% for an extended period, which sort of brings it more aligned with some of its peers. And I think Westpac maybe is the only one. I think Westpac is the only outlier at the moment. I think Westpac has forecast the cash rate to go down from 3.6% to 3.35% by June next year, followed by potentially another cut in September, which would take the terminal rate to 3.1%. But I don't think the other majors are expecting a lot of love from the RBA.
I think we had both CBA and NAB move theirs last month or maybe the month before, actually. And then now ANZ saying it. And we've also had GDP figures out this week. And that also had some people changing their minds about what the cash rate trajectory was. But pretty much everyone being definitely not in December. And Michelle Bullock actually this week was also speaking to I think it was the housing. No. It was one of the committees. Yes, it was either the Housing Committee or it might have been the Economics Committee. I can't remember off the top of my head. But she was in Parliament this week and she was basically being it is so hard for us to know what the neutral rate is. And we're looking at all the data and it actually is telling us different things. So they're in a tricky spot, it seems, at the moment, because they're not sure whether things are needing more easing or even if they might need some hiking.
Yeah, exactly. And what a difference a few months make, because I think everyone was in such a mindset that we were as part of a rate cutting cycle and there's going to be more cuts and that kind of thing. It's maybe this is it. What the rate should be at the moment.
Yeah. And, of course, that's kind of a good thing in some ways, and that it's balanced and that you've got some certainty for a while of where it is. And, but having said that, of course, not great if you have already got a mortgage I do. I would very much like my repayments to keep going down. But I'm pretty happy with them staying flat. What I don't want to happen is that they start going up. And this is the conversation that's been changing the last few weeks, is people talking about a hike next year and being well, if we keep seeing inflation running away and spending going really high, maybe it's moving, maybe it's too loose. Maybe we're actually not restrictive at the moment. Maybe we should be tightening up a little bit and going back up.
Yeah, that's been the big change in the recent discourse, I think. And yeah, I don't think it's anything anyone particularly wants to hear, but I think they've got an eye on what inflation has been. The RBA has an eye on what inflation has been doing, and yeah, they're going to explore all options.
And the other thing they've got to think about as well, which they were talked about this week in the hearings, was saying, well, housing is such a big part of it. And we keep seeing all of these government schemes for people to buy housing, increasing demand, which is increasing house prices because the supply is still so low, and really seeing this cost, the housing costs, keep on ticking up. So I think that's another thing that they have to kind of grapple with. Now, the RBA is not responsible for housing prices, and they don't really want to be. They're the central bank. But this is a big consideration they're having to look at, is being like, well, what are the kind of, what is demand looking like? What are people spending their money on? Is it restrictive? Is it too loose? And we keep seeing all of these new schemes, like the Help to Buy scheme that's just launched, a 5% deposit scheme that was expanded. There's all the, sort of stamp duty stuff. There's local government things. There's a lot going on at the moment in the housing market. So it's not an easy job for the central bank.
No, not at all.
But I think that's generally, what we're sort of thinking now is saying December pretty much going to be where it is. No Christmas presents for us in the terms of a rate cut by the Economist standards, at least. So we'll keep you posted, obviously, next week when it happens. But I wouldn't hold your breath.
No, I don't think so.
We'll take a quick break here. When we come back, we'll just talk about some of the other things that we've been seeing in market and writing about, and we'll get into that just after this. So this was an interesting one that happened on Thursday. RACQ Bank selling its loan book and deposits to another bank.
Yep.
Didn't see this coming.
No.
Completely kind of took me by surprise, actually. And to be honest, I don't actually write about RACQ Bank a lot. I don't know if you've ever written about them.
No, I don't think I have.
Not one. I mean, it's not a huge lender. They have a loan book of 2.7 billion, so fairly small, and only 2.5 billion deposits. So yeah, generally kind of a smallish sized book, but they're selling it to Bendigo Bank.
Yeah. It's an interesting move. Did they say why they were doing it? They're just
basically to focus on their core offerings for people. So kind of being like, we want to make sure that we're continuing to offer all of our customers or members RACQ stuff. and banking's not their core area. So they're kind of like, if we kind of sell this off, then we can actually really simplify our business operations. We can kind of focus on what we want to be, and ensuring that all the customers as well, of course, have access to a much bigger bank, more savings, more offers, more products. So kind of being like, actually, it works for them too, because they're going to have a better sort of banking experience with Bendigo Bank.
Yep.
Because it's so much larger. But yeah, we don't know the cost of it. And this is always the first question we get asked whenever there's a sale. It's being like, how much did it go for? And we haven't been told that yet. It's not actually completed. I think it completes early next year. So they were saying the final sale price will be based on the assets and liabilities of RACQ's retail lending and deposit business at the point of completion. So we don't know.
No.
But we assume a bit. And Bendigo Bank, kind of buying this in, and it's a bit of a tricky time for them at the moment. They've been having some questions being raised. We've been looking at their quarterly updates and sort of seeing what they've been doing, and some regulatory issues. There've been some sort of looking at what they're doing with their distribution arms as well. A lot of focus on proprietary. So yeah, kind of interesting time for Bendigo.
Is it similar to what we're kind of seeing in the mutual space, where you increasingly kind of need more scale to be able to service customers better?
I think that's true, because RACQ Bank, as I said, is pretty small member base. So yeah, having that kind of the compliance, having all of the capital, kind of really providing that it does require a lot. And we know this time of year as well, everyone's talking about scams again, because it's Christmas period, another opportunity to get scammed apparently.
Yes, yeah.
And Black Friday just having gone as well. So lots of banks kind of really tightening up their fraud protections, their scam protections, their cybersecurity, and that's expensive. So I think, a lot of these smaller banks like RACQ Bank is just sort of being like, maybe we just want to give this to somebody else.
Yeah, fair enough.
It's an expensive problem. But yeah, it's a good point, because we've seen so many of the mutuals merging and selling and kind of coming together. We did have a huge spate of them this year, of mergers kind of finally completing. I think we might have one more that's going to complete before the end of the year. But I can't even count how many have actually happened this year. It must be at least 4.
Yeah, it's a big year for mergers.
Big year for mergers. Yeah, it'll be one of our wrap-ups, I'm sure. When we do the Christmas sort of period stories, I'm sure that'll be one of the themes of the biggest news of the year will be all of the millions of mergers happening. So we had the RACQ Bank story. And then we also had some research come out from Broker Pulse, which are a research company here, Agile Market Intelligence, conducts each month. So they do a survey of brokers for different things, one on commercial lending, one on residential lending. And they asked them, which banks and lenders have you used over the month? What was your experience of using them? And I thought it was pretty interesting seeing that there's a much higher proportion of brokers now turning to non-banks. So something like 53% now using non-banks for their clients. And this was for the month of October.
Yep.
And that was the highest it's been, I think, for 3 years. What does that tell you?
Yeah, I mean, I think it tells us that, the non-banks are sort of stepping in to fill a void. The non-banks and the specialist lenders are stepping in to fill a void for particular clients in particular sort of borrower segments. And brokers are kind of responding to that. What brokers said during the survey, the main reason they were choosing the non-banks compared to sort of traditional lenders was clients' circumstances. I think 83% said the main reason they chose it was better policy alignment.
Yeah.
And I think that's really what the non-banks are sort of there to do, I think.
Yeah. And I think that's a sort of raison d'etre, isn't it? Just being like, we can fill the voids that banks don't have. So yeah, I think that is always the number one attractor whenever that question is asked, being like, why do you use a particular segment? Yeah. Pretty much every single time non-banks, it's for client circumstances because they have these niches. But yeah, that actually went up. I think it went up 2 percentage points from the last survey. So I think it shows that there's a lot of shifts and changes going on, like lots of lenders changing their appetites for different segments of the market. We heard obviously recently Macquarie changed its sort of policy for trust lending. We've seen some changes in the self-employed lending space as well. Lots of the non-banks really opening that up. Some of the banks as well, actually. But then others pulling away from it. So it's definitely a lot of change. And I think that's why the non-banks are really kind of stepping up into the space, particularly, again, for things like trusts, SMSF, and self-employed. But we also see more brokers using non-banks for commercial too. And I think we had some stats from Banjo this week talking about the fact they've seen this huge spike in increase in SME clients coming to them through the broker channel, particularly for larger size loans, because they launched a kind of an expanded loan product recently, didn't they? Yeah,
I think it's their Express Loans product. I think they announced earlier this year that they're expanding the loan amount from 250,000 to 500,000. And essentially it's the same product aside from that. But apparently they've seen a 300% increase in demand.
Tripled.
Yeah, so it's definitely resonating. And I think part of the reason they said is because, that typical sort of end of year rush for businesses.
Everyone trying to restock stuff, get ready for the holiday period, for the summer holidays, and being like, do we have enough stock? Do we have enough staff?
And also things like covering wages where you might not be receiving invoices in as well. So,
that's true. That's a good point. Yeah. And I think they were saying there are certain areas in particular, like construction, for example, one of the areas that's really seeing strong demand for this particular larger loan size. Now, we know the construction industry is just like really in demand at the moment. So you can imagine lots of people needing to buy lots of stock. Costs of materials also has been pretty high this year. So maybe that's also playing into the fact that more construction companies might need more money.
Yep.
But yeah, really interesting to see that. And as we say, brokers turning to non-banks for commercial lending too. Although, having said that, the Broker Pulse survey showed that the majors are still the most frequently used when it comes to commercial lending for property. So I think pretty much all 3 or 4 of them were in the most used ones for October when it came to commercial mortgages. So I thought that was quite interesting.
Yeah, I think, was it ANZ out ahead?
Yes.
ANZ was out ahead with 47% broker submitted applications.
Yeah, which is quite high.
Yeah.
ANZ, though, nearly always up at the top for both resi and commercial. And I think that's probably because they have a lot of, policies that most brokers really like. They're really well known for that kind of professional, high loan, no LMI policies. Yeah. They're known for commercial and a lot of things, as is NAB, obviously. And yeah, lots of brokers sort of talking about why they've been using them. So if you haven't checked out the Broker Pulse survey, I would definitely recommend you do. You can obviously find the story on The Advisor, which will be linked in the show notes below. Or you can actually go and check out Broker Pulse on Agile Market Intelligence and sign up to it if you want to take part too. That's a lot that we've covered off there, Ben. Sorry about that. But we have had a hugely busy week. So if you haven't caught up on all the news, then do check it all out. You can find out more about what we've talked about today in the show notes. Of course, have a peruse through the rest of the website as well. Check out the magazine. It's out now too for December, January. And of course, have a great weekend. What are you doing for the weekend?
It's supposed to be really hot in Sydney.
Hot.
Yeah, I mean, I don't really have much planned, but I might try and get into some water at some point.
Yeah, just flop in. I think it's our podcast producer was saying it's going to be 36 degrees today here in Sydney. So
Right.
I'm like, I might have a swim after work today. It sounds like it's going to be too hot. But yeah, I hope everyone else has a great weekend, and we'll catch you next time for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.